Hi, this is Randy Finney with Right Side of the Chart, and today is Friday, April 23rd, 2021. Quick update. Won't go into a lot of stuff here. I don't see a lot in the charts to point out today, so I'm going to just keep this one very brief. This is the NASDAQ 100. We're still above those recent lows that need to be taken out to that, along with the support in the S&P 500 ES futures to give us a sell signal. So this is it's been one of the longer rallies I can remember until we've had a decent sell signal in the markets. Again, we had that little break below 13,772 on NQ, but it did not coincide with a breakdown on the comparable support for ES, so that doesn't qualify as a bona fide sell signal in the markets. Here's where we're at right now. There's a potential downtrend line. I call it potential because in my book it takes 3 distinct reactions to validate a trend line, because any 2 points can be connected at random, and we're there now. So quite often when you have a high like that, you can draw a trend line and it'll come into play. So my guess is probably it for today. And there's that previous reaction high just above it. So I think we'll probably get a little pullback. That's just a micro call. And if we get anything much more than that, you're going to have taken out that previous reaction high, which, near term, that can only be chalked up as near term bullish. But again, we still very much had those a divergent high in place recently, and still will, even if we went on to make a marginal new high from here. I talk about that quite often. So remember, divergences are not a sell signal. Something like a break of support or a solid, bearish reversal candlestick pattern, things like that are. And so again, where we haven't had a decent sell signal in the market, or objective short options last year, that was the last one. We had rallies into this resistance zone. Those were objective short entries. That one worked out. That one worked out. That one we had a breakout, and that was an objective buy signal. So really, basically the markets remain on a buy signal since that breakout of the resistance zone, and pending the next sell signal, which I still believe is coming soon. Probably not today, and that's why I want to get the video out. So I'll probably cut out early today. I don't see a lot of trading opportunities, although there are a few the recent trade ideas I gave you I want to highlight today, some of the ones that I like. Let's look at ES real quick. ES, the S&P 500 futures, the level I've been watching is 4104, call it 4100. And what I did is I've added a little parallel trend line just above, because it seems we've reversed a little shy of that level each time. And again, that's what needs to happen to take out those recent lows, those 3 lows. And again, we'll give it the benefit of the doubt, round it up to an even number and call it 4100. And so that's it. So we haven't had, gosh, I can't remember the last sell signal on the S&P 500. We've had divergences that did result in corrections, but we didn't have clear uptrend lines there. This one, we had a clean uptrend line and we broke it. A fairly clean. It wasn't even that great. There weren't too many reactions, and we've been moving sideways. But again, the divergences remain intact. They were in place at this last high. Any marginal new high anytime soon will be just simply an extension of the current divergences. So my intermediate term outlook hasn't changed and won't change until and unless these divergences are taken out and we head on up and shrug off the divergences. So that's it. Still on waiting the next sell signal, which we don't have at this time. And then looking at the index ETFs, let's just focus on the 60-minute chart. There's SPY, same story. 410, 40-ish is our support right there we need to take out. It's been containing all pullbacks, and it is that simple. And we put in a divergent high recently. Looks like we've been correcting sideways so far. And again, should we equal that high or put in a marginal new high anytime soon, we'll be assured to still have the divergences, even larger divergences in place. So same thing. We'll have to go down and take out 410.39. And on QQQ, the level to watch is 333. We'll call it 334. Round up. Make that an even round number. And that's it. That's holding support right there. There's that trend line, little minor trend line, which we back tested once, and we'll probably come up back tested again right around that previous reaction high. So again, there's minor resistance right here on QQQ, and it's anybody's game right now. We're just moving around sideways. So, last couple weeks here, market's gone nowhere and won't go down unless that 334 level is taken out, along with that comparable level on SPY. All right, so forget about the markets. There's no money to be made there recently. There may be soon, so I'll continue to update these. But now let's look at where the opportunities are. I've covered commodities extensively, and I don't see anything really on any of them that stands out today, so I'm not going to do any updates there. Again, there were updates as recent as yesterday. Let me cover some of the things that do look interesting right now. Well, one of my favorites is one of the more aggressive trade ideas. I covered it in the about a week or so ago in the long side trade ideas video, and we were coming up at that time, we were right here coming up on this, or just had come up on that 1254 support, and I said if that goes, we have even better support down here at about 1079, and that's what we did. We came to the better support, which was an objective long entry, and you have the divergences in place down here on the RSI down at the bottom, and so far off that 1079 support level I gave you, we hit a low of 1078, close enough for government work, and from there we've rallied, if I can get it close enough, we'll just come right here, that's close enough, about 30%. And I've added a downtrend line. The only thing different on this chart is the divergences extended. I've had them here before, they're right here. And I added this potential downtrend line, just like the one I just gave you on NQ, because we had that high, that reaction there, and not really a reaction so far, but again, we're moving up impulsively. We had a very impulsive reversal and bullish engulfing candle. I think if we engulf the body, you only have to engulf the body of the previous candle, and I think that looks like what we did there. And so far, moving up nice. Again, up about 30% from there, and even if you took it at the 1254 with a stop somewhat below that 1079 level, you're still up about 11-12%. And my first target remains 1566 with a second target at 2141, which would be from off that 1079 level, roughly 100% return. Again, more aggressive trade, but one of the better looking ones in my opinion. I still like that plug. Plug was a long idea off this 25-28 support, and we're coming up, and I think if we can take out this downtrend line, that will be also a buy. The next objective long entry would be a buy signal. So far we've held support like a champ, 1, 2, 3, 4, 5 consecutive days, and we're still above it, but we're pinching in there. So this one's pinched between support and resistance, if we pop that, you also have some resistance overhead at 30.09, which could also be your first target. If you took it at just off 25, then you're talking a decent run up there, about 20% to that first target. And then if we break out, my next target, I'm going to give you one more right now because I'd be remiss not to do so. I'm going to add a target for you right here, and I like that level. Why do I like it? Well, we had several reaction highs right there, the bottom of a gap. We had that candle, there's a gap, so those are reactions. Reaction low, reactions here, reactions there. So that's actually a very ideal target. If let's say you're not trying to hit a home run up to 48.59 or even a back test of the trend line, that would be a big, double on your money if it hits the trend line. Even to that 48.59-ish target, that's about 80% return from where we're at now. Again, not even probably 100% from that level there. Let me get, 90%. Anywho, let's just go back to where we're at now, up to that 37.50-ish target. You'd want to set your sell limit a little bit below that. That's about a 38% return. And this one, if you want to look at it on the 60-minute chart, here's your downtrend line right there, and your divergence. We have divergence on both indicators, RSI and PPO on the 60-minute chart, and that's it. Boom. Resistance or target number 1, target number 2, resistance, and target number 3. Okay, in that same long trade idea, I laid out this idea, PGJ. It's a breakout of the downtrend line and a pullback to that nice 60.46 support. Look at all these reactions there. resistance, 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 breakout, back test, and so far we're good on this one off that level for about almost a 9% gain coming up on my first target now. Be aware, that's 66.19. You want to sell a little bit below that. If that gets taken out, we could head up for a back test of the trend line. I'm referring to this trend line right here. And then you have just above that, or it may come in together if we get there, about 73.81 resistance. Next one up would be, I'm not going to go over each and every one. I'll do Alibaba because it's somewhat related, Chinese company. BABA is a symbol. I think you can see it down there. And this one, the story of this one was a pullback to this trend line right here. There's our primary uptrend line, pulled back to the trend line, pulled back again. So it's still an objective long with a stop somewhat below that trend line for a swing target up there to 268. And then the energy stocks hanging in there. XOP was highlighted the other day right here at support. A little bounce, nothing big so far. You still have the downtrend line resistance. Where this goes will likely depend on where crude goes. And then you had XES as well, also holding that resistance at this point in time, but not really an impulsive buy yet because crude's trying to decide where it wants to go. And I'm, like I said, I told you, I'm kind of leaning towards another leg down in crude. So I'm not, these, I throw them out there as objective long entries, but they're not like, screaming buys. Have mixed signals based on where I think crude is likely headed. But I'd be remiss not to point these things out. It's not my job to tell you what to buy or where to buy it, but my job is to show you objective entries, setups, key levels to watch, support resistance levels and other developments like that in the charts, and then you guys decide based on what your outlook is whether you want to take a trade or pass on it. XLE, same thing, fell back to the $47 resistance, so far holding it but not moving impulsively higher. And it's what happened is we crossed under the 50-day, that yellow line, which has acted as support here. And when you're below it, typically the trend is bearish, and when you're above it, like right here, you broke out, the trend is bullish. So we're not too far from it. So you can't really write it off. There's still a chance that we could bounce in XLE. And if we don't, I'd almost put equal odds that we break and go down to that 45.30 level, which is the next support level there. So just wanted to do an update on those guys. Update on Walmart, or not Walmart, I wanted to update Home Depot. Home Depot, well, I highlighted Walmart at the time. There was quite a few back here, right when we fell to a lot of these key resistance levels. I highlighted Walmart off of that 128-ish support right here. Good for, so far, a run of about 11%. In that same post that day, the very day we hit this 247 support right here. I think it was the first time we felt it. I covered it in a video and then highlighted again the next day, I believe, to buy Home Depot 247. An objective long entry. This one's been a screamer, straight up like a rocket off that level, about 32%. Now, where I'm going with this is I wouldn't be buying it now. We had the run. Maybe that's a little bull flag, but I doubt it. This PPO is rolling over at high levels. We're extremely overbought. Last time we were this overbought was right here. We didn't correct a lot in price, but we certainly correct a lot in time. We went sideways for months. So time to tighten up stops on Home Depot if you took it off 247 back then it was early May, March 5th or 4th. I think I covered it first in the video on the 4th and then a follow-up with the chart on the 5th. Right there. Here's where I think you can have a tight stop just below these recent lows, just below the about a little below 319, maybe 318.70, 318.50, somewhere in there. That's minor support, and that's where I would consider a stop if you took that one. This one I still like. It's still a setup. GSHHY, very not very aggressive, but it's only a $10 stock. I think it's I believe it's a Chinese railroad. I haven't looked into the company fundamentals or anything like that, but that was it. You had a big divergent low right here, and we've been moving higher. We've been in an uptrend. It hasn't been a very strong uptrend. Again, this is a railroad stock. It's not a tech stock or anything like that. And you have a nice downtrend line right here. Very nice downtrend line. And 1055 resistance. So if it can pop that, As I covered it in the previous video, I don't see hardly any resistance up until about 1533 or so, and so that should be close to 50% return if you get that one. So again, still a setup. As I mentioned, it took out the downtrend line, but the bigger level to me is 1055, and there's an uptrend line as well. Now, if you want to get really aggressive because you don't have a buy signal yet, you can buy pullbacks to this uptrend line with a stop somewhat below, maybe on a solid daily close below there. The benefit is if it does reverse and go on to breakout from where we're at now, I have to move that line, but if you buy it right now on the pullback to the trend line, well, just to get up to 1055, it's about a 6% move to get there. So you're getting a little more favorable entry price. Now, what I would do if you're going to do that is only consider maybe a half a position at this point in time and not take it to a full position if it breaks out. And a full position in GSHY is a fraction of what you would have put into, say, that Home Depot trade from a few months back, a couple months back, because Home Depot is, a blue chip company, more stable, less downside risk than a company like this. And with everything, don't get married to it. You break down. The stock has been in a larger downtrend. I believe it's in a basing pattern. It's what it appears to be, but it needs to break out of that pattern. Otherwise, it's just another consolidation in a bear market or a downtrend, which this one has clearly been in. So again, like everything, don't get married to a stock, any trade, no matter how much you like it. Another update on ETCG. I think this one's finally feeling the weight of Bitcoin. I told you I got a pretty powerful sell signal on Bitcoin, first sell signal in a long time. And this is obviously, it's not Bitcoin. It's if anything else, it's a competitor. It's another cryptocurrency, but broke out. And as I said, that breakout's a little suspect because you have the divergent high. Now, there's been several trades off that level on the pullback here, but here we are. We broke out. We already back tested a couple times. We're back there again. And the divergences continue to build. And then the bigger picture, or probably as important or more important is what Bitcoin's doing, because that's the 800-pound gorilla. And again, the sell signal to me was very clean and clear. That gap down, breakdown, impulsive move down below there. We danced on that 52,969 support for several days and then broke it. And I said the other day, once we break it, I expect a pretty relatively swift move down here to 44,944. We're a little over halfway there so far, or we're about right in the middle right now. And so therefore that's been putting pressure on the cryptos and the crypto proxies, that I call them, such as Riot. Riot's going to move with that. Riot just took out that $38 support. Next support down at 27. Mara, mentioned Mara, right here, and already down about 33% or so, and it's at that 28.93ish support right now. That's that previous reaction low, and some of those with the next support down around 24.37. What else do I have for you? Well, that's it. I just, lately I've been throwing out a mixed bag and of trade ideas, both longs and shorts. This is a short setup. Remember, not an actionable trade. Has to take out 98.68 with conviction. That's Peloton, PTON. First target 72. Then potentially, if that's taken out, we'll see if and when we get to 72 and start to approach it, how it looks. I'll give you my thoughts. But that would open the door potentially for a move all the way down to 38.48 or 38.50, we'll call it. That's about it. Other than that, market's rallying today because, again, this is the Teflon market. Nothing's it's not that the breakdown we didn't get a breakdown in the S&P, and that's what we need. So it's been bulletproof so far, and but again, the charts are indicating we're most likely very close to getting breakdown as long as these divergences remain intact, and unless we do, continue to trade where the opportunities are. Still like treasury bonds. I still like commodities. I still like gold. Is swing positions and current, active trades right now. I'm going to wrap it up here. I can't think anything else. I'm looking over a couple different monitors, and I'm trying to see anything else that's moving, and everything else is probably about where it was during the last update. So we'll wrap it up here. And if I do see anything else today, like I said, I'll probably take the afternoon off, or at least part of it. But if anything else pops up on my radar, I'll get it out to you guys. This has been Randy Finney with Right Side of the Chart. Have a great day.